Thanks everyone for coming back to our next edition of Econ Talks. And Gareth, I mean, the housing market's still showing a lot of promise at the moment. I've been looking over some of the numbers from realestate.co.nz and CoreLogic, and there's still a lot of heat and a lot of pressure coming through there. I mean, what do you make of that?
I mean, it's defying expectations, isn't it? You go back 6 or 7 months at the height of lockdown, and everyone was expecting the job market to collapse, the housing market to follow up pretty quickly. But of course, neither of those have really gone. I mean, what are we seeing in terms of those sales and prices at the moment?
Well, at the moment, listings are pretty much holding up, getting slightly better, but there's just so much demand in the market that people there's heaps of people in there, not as many houses to be sold, and so those stock numbers are low, record lows across a fair swathe of the country. And I think that's, highlights just how much pressure there is. People are seemingly holding on to their houses, or not. There's no real change in those listings numbers. It's just the sheer number of people that are in the market. And I think if we step through it, there are a couple key drivers of that sort of activity. Firstly, you do have people who've come back into New Zealand. There was that big influx since March. Now that stopped, but you've still got a fair few more people who are out there looking for property, and so that's pushing things up in terms of the pressure. But more importantly, those interest rates, they are low and they continue to push lower. That's bringing a lot of people into the market, and not only just because things are cheap, but also because you can't make a return anywhere else. And I think particularly if you're an older person, you're looking for a return on your money. You're not going to get it from a term deposit. You might have been burnt back in the 80s with the stock market. You're probably not so keen to put your money there. And they do say that houses are, well, as safe as houses. So people are wanting to put their money in there. There seems to be a good return. And look, on the numbers, there's no real change.
Yeah, you're right about those returns, and I think it's not just necessarily buying houses or investment property for yourself. It's also helping younger family members onto the housing ladder as well. Because, like you say, there's not much point keeping your money in the bank when the interest rates you're getting are barely above zero there. Um, At a regional level, we're seeing much sort of a variation in the numbers. Obviously, the changes in migration and population growth. Historically, that's had a big effect on Auckland. But what are we seeing with the latest numbers coming through?
Yeah, look, Auckland's still hot, according to all the different numbers that you can look at. I think realestate.co.nz saying that the average asking price in Auckland's headed over $1 million now. So everything's expensive there. I mean, we already knew that, but this just confirms that direction of travel continues to go up. Stock, though, in the likes of down in Central Otago and sort of around Queenstown is up, bucking the national trend. And I think what you're seeing there is, one, those holiday homes or Airbnbs and similar are going on the market, and people who might be in a bit more financial stress and pressure are starting to I guess, unlock themselves from the housing that they've previously had. But and I guess that goes to another quite interesting facet of where housing is moving. We just noted a few of those reasons that the housing market is going up, and of course, there's a bit of a concrete floor foundation underneath the housing market at the moment, stopping it from going down. The Reserve Bank's got its mortgage deferral scheme and similar in place. That really stops anyone from going down. And I think, some of the numbers out from RBNZ indicating there's something like 10,000 or more mortgages that are in arrears of some description. But again, there's no need to move on those yet. So there's a lot of upside heat, but no real downside risk at the moment.
Yeah, not for now. Obviously, that mortgage scheme in place until at this stage March next year. Be yet to see. Of course, it's been extended once. Whether the government will consider doing that again. You mentioned Queenstown, and for me, that's an interesting part of the market because obviously that the regional economy there has been one of the most heavily affected by the borders being closed and the downturn in tourism, and how that's flowed through to the housing market in terms of both. We've seen rents coming down there. We've seen house prices coming down as well. So for me, I look at Queenstown and see that as a bit of a canary in the mine for what could come through in the housing market around the rest of the country if we do see more job losses materialising through into 2021. But at this stage, those sort of prospects seem quite a long way off, don't they?
Oh, absolutely. The trends are going in one direction and one direction fast at the moment, and that is certainly up. Those prices are just at an incredible level. And I guess what we're seeing and what's even harder to understand in a sense, or harder to comprehend, is that not only are house prices still going up, but they're going up at a faster rate. That acceleration is still coming through. And so I think, it'll be a while yet before we start to see any concrete signs of softening or any possible decline. And I think, the expectation again continues to just be pushed out into next year.
Yeah, I think that's right around the timing of it. I'd still, like I say, I'd still be concerned about the job losses and just how they may impact on the market. But yeah, no signs of a slowdown occurring at this stage.
Absolutely. And look, I mean, it's the thing that Kiwis love to focus on. Housing is such an important area of fascination. So we'll continue to keep an eye on it. And I'm sure we'll chat about the topic again soon. Thanks, Gareth. And thanks, everyone. We'll catch you next time on the next edition of Econ Talks.